Let's bring some business news now on the programme. Stephen Carroll's joining us here in set. He's starting with the latest twist in the US-China trade dispute.
Yeah, that's right. Reports in the US media say the Trump administration is considering tariffs of 25% on another $200 billion worth of Chinese imports. That's higher than the 10% previously threatened by President Trump. A final decision on those tariffs isn't expected until August. The US has already imposed a 25% levy on $34 billion worth of Chinese goods. It's set to add another $16 billion in the coming days. This news coming as officials in Beijing and Washington are said to have begun preliminary discussions on diffusing the dispute.
Now, next to some bumper results from Apple.
They're in fact the best ever figures for this time of year for the iPhone maker, pushing the company closer to being worth $1 trillion. Now, it's partly down to increased revenue from services and accessories, but the results were also helped by people buying more expensive models of the iPhone, and in particular the iPhone X released last year. Axie Myers-Belkin reports.
A price hike that's more than paid off. Apple may have sold fewer iPhones than expected in recent months, but the popularity of the $999 iPhone X has helped the company deliver its best ever revenue for a quarter that's typically its weakest. The tech giant's turnover has increased 17% year-on-year to over $50 billion. Profits, meanwhile, rose a third to $11.5 billion. An average iPhone selling price of $724 has been a driving factor behind these impressive figures, but they're only part of the story. The company has been steadily expanding its reach into emerging markets. Every region apart from Japan is reporting double-digit growth. And then there's Apple's services business. The App Store, Apple Music and Apple Pay collectively reported growth of 31%, a sign that the company's push to diversify into software and subscription sales is paying off. Looming over Apple's good news, the Trump administration's threat to impose tariffs on some $500 billion of Chinese imports into the US. China accounts for 20% of Apple's sales, and retaliatory measures would be damaging. But Chief Executive Tim Cook appears unfazed, saying he's optimistic this will get sorted out because there's an inescapable mutuality between the US and China. If he's right, Apple, currently valued at over $950 billion, is well en route to becoming the world's first trillion-dollar company.
And while Apple results are good, by one measure, they've actually been overtaken by a rival.
That was right. They were already trailing South Korea's Samsung in terms of smartphone sales, but now Apple has lost its number 2 spot to Huawei. According to the market research firm Strategy Analytics, the Chinese firm shipped 54 million devices in those 3 months to the end of June, compared to Apple's 43 million.
How's it going down on the market since, Stephen?
We'll take a look first at what was happening in Europe at the open there. There is some relief generally in the technology sector. There has been some good news after a couple of bad days. Shares in Air France KLM opening up over 6% after their latest results. Strikes had cost the airline group €335 million in the last quarter, but it still managed to turn a profit thanks to increased passenger numbers. That's impressing investors. On the Asian markets, Apple suppliers getting a boost after those results. Sharp, which makes screens for Apple, was up 7% in Tokyo. Investors also keeping an eye on those latest movements on the trade issue.
Now, Greece is due to finally exit its bailout programme this month, in fact, but the IMF is worried, isn't it?
In its assessment of the Greek economy, the International Monetary Fund has questioned whether the country's debt will be sustainable in the future. Eurozone countries agreed to debt relief earlier this year, which will see repayments pushed back for Greece until 2032. But the IMF says the budget surplus targets being asked under Greece's post-bailout conditions will make its debt costs unsustainable in 20 years' time. Greece is due to exit its bailout on August 20th after 8 years.
And finally from Stephen, officials in San Francisco, they're trying to get workers from big tech companies to actually eat out more.
It's one of those perks when you work for those companies. You get a large canteen with free food, usually very good food as well. But local officials in San Francisco are trying to introduce a measure to stop big corporate campuses from having canteens. And the argument is that it would mean workers would leave their offices and go into local restaurants instead, thus bringing more benefits to the local economy. This is a particularly sore point in San Francisco. There's a couple of tech companies moving from Silicon Valley into the city, bringing high-paid workers, but it's sent the cost of living there spiralling even further.
2-hour lunch breaks then, if they're all going to go to restaurants.
I wouldn't say no to that.
No, exactly. Thank you very much, Stephen. Stephen with business.